Namaste and welcome to Pods by PEI, a policy discussion series brought to you by Policy Entrepreneurs Inc. My name is Kushi Hang. In this episode, the first of a two-part series, Soumitra Nyupane, Executive Director of PEI, sits with two guests, Anup Upreti and Shreejesh Ghimire, to discuss the current state of and the future of development financing in Nepal. Anup is a legal expert who regularly advises clients on diverse transactional matters ranging from foreign investment, project finance, to private equity. He is the managing partner of Pioneer Law Associates and specializes in financial laws, foreign investment, private equity, and capital markets. He holds a degree in banking and financial laws from the Queen Mary University of London. Similarly, Shreejesh is the Chief Investment Officer at NMB Bank Limited and was formerly the CEO of NMB Capital Limited. He is an MBA graduate from Kathmandu University School of Management with a specialization in finance and marketing. He also holds a BMCC from Pune University, India. We hope you enjoy the conversation.
Namaste, this is Soumitra Nyupane.
Namaste, this is Anup Upreti.
Namaste, this is Shreejesh Ghimire.
Welcome to yet another episode of Pods by PEI. We have two guests in the studio today, and we are discussing financing Nepal's development and growth. The Nepali polity is filled with punditry and expert explanations on Nepal's economic development. Both our guests today are centrally placed in Nepal's economic development and economic growth mechanics, and the goal of today's episode is to bring out some new perspective to the discourse. Anup, Shreejesh, welcome to the show.
Thank you for having me.
Thank you.
Well, I want to begin today's episode by laying out some context. And the point that I want to start with, this rhetoric around Nepal becoming like Switzerland and Singapore. I think centrally this has shaped a lot of our imaginations while growing up of what development should look like or what growth should look like. 65 years down the road of planned development in Nepal, 5 separate constitutions outlining our growth models and our governance mechanisms, and our aspiration for development and growth still remains unsettled and unmet. Not discounting the fact that in these 65 years, we've made some remarkable progress, especially on the political and social spheres. Political being that we've transformed from an autocratic centralized regime to now a federal democratic republic, and the social gains being those in sectors like health and education. But despite this progress, we haven't made ways forward on economic spheres of development and growth. The progress there on our economic sphere has not been as desirable. The fact of the matter is that Nepal today, we're barely a country with $1,200 per capita income, and our economy is largely dependent on remittance that we receive from export of labors. We are at the cusp of LDC graduation, as you guys know. And the interesting thing being that we are the only country to be graduating from LDC, but without meeting the income threshold. This is very unique in its sense, and probably we'll go on to discuss this later in the episode. I want to kick off today's conversation by asking you both to briefly talk about your take on the state of development and growth in Nepal. Later in the conversation, we'll go on to talk about how we can envision our future and how we can go about getting there. But let's perhaps begin our conversation today by your take on what was those visions that really captured your imaginations growing up and the trajectory that Nepal's development and growth process has moved thus far.
Maybe those of us who grew up in 90s probably can relate to me. So we grew up kind of listening to the same narrative. We listened to politicians selling us the dream of Singapore. In that context, what I think is, I'm 45 years old now, and then I don't think so I have been able to enjoy the prosperity, what I had thought about when I was growing up. So I think that hasn't happened. I think now what I'm thinking is, when will this prosperity come? So my daughter is 10 years old. So first is, will she be able to enjoy the prosperity in this country? If that happens, when will that happen? Is it going to be when she's 20, when she's going to be 25, 35? At what time? At least when she's 45, she should be able to do it, for example. Again, the context is really, then we come back to, prosperity could be very subjective. Maybe, Shreejesh, you could add on, put the context of what could prosperity mean in terms of comparable perspective. Right?
And you don't have to reveal your age.
Well, prosperity, probably when we were growing, probably a good party or a nice holiday was a prosperity. Like looking in the TV channels, seeing the outside world, the West, or the nice gifts that we used to get when our parents or someone is traveling and bringing home was prosperity. But going deep down into it, prosperity, if you're really looking into prosperity for your daughter or my daughter, prosperity for me is more, it's like connectivity, like good roads or the rails, which enables the easy mobility, or the lifestyle, where one of the benchmarks that we use as on a development side, like the consumption of electricity. Consumption of electricity is primarily for what kind of gadgets, how do you make your life easier? Likewise, like good education, likewise good healthcare. These are all the prosperity factors. And over the period of times, now when I travel myself or you travel, the first question that strikes in all of our heads is why are we so laid back compared to the rest of the world? So maybe in the last 20, 25 years, where we failed was bringing the good investments, doing the right investments. And again, the prosperity is primarily, it connects to the income. So if your income grows, so you can buy products. And to get the income, then you need to do the investments first. Probably we haven't done the right investments. And that's why the prosperity part is still missing.
I like the way you've kind of operationalized this idea of prosperity, connecting holidays and lifestyle changes with things that need to be in place for us to do that, right? And this, I think, is a good conversation to go back on that question around LDC graduation. This idea of Nepal graduating without meeting the income threshold is very unique. And this is a point that kind of, for me, reflects, I stand to think whether this is a good thing or bad thing. I don't know. But somebody who's worked in the financial sector, you understand the economy, you understand the value of money, you understand the value of income. What does this essentially mean when Nepal is graduating without meeting the income threshold?
Well, it's a challenge in itself. Primarily, if you look into the countries that are migrating from LDC, we are of course, a unique country because the lot of preferential treatments that we used to get, the grants or mostly the funds that we used to get, we would have used that as a mix to raise a commercial capital, use that to raise the income bar like Bangladesh. Now, since we are migrating into a lower middle income group, from 2026 onwards, the preferential treatments will not be there. So that means doing business will be relatively more challenging. So in these years where we're LDCs, had we somewhere or other mobilized the capital towards bringing the income level up, it would have been a big help. So the days will be definitely challenging.
Interesting. Anup, what do you think about the state of Nepali economy not graduating without meeting the... What does it actually signal? I mean, you talked about a very emotional description of what prosperity was when you began your conversation. But how does that actually translate to economy and the state of our economy today?
So I think, this unique situation that we're in, that we're meeting social parameters and really not meeting economic parameters. And at least if we see in our context, I don't see anybody is thrilled about we graduating to LDC. No politicians ever come out and said, yeah, this is because of me. It's odd that we've achieved something, but we don't see this as achievement. And I think there's a big vacuum here because we know we've not done well in economic parameters. And yes, I mean, other social parameters are very important. But if, we graduated based on economic parameter, there would actually be celebration. Now, when you look at, in terms of the challenges, like Shreejesh talked about as well. So we now have to compete with those countries with when our infrastructure is not really ready, or we're not economically ready, or we don't have things in place to really compete with these countries, I think that's where we need to look at it. And I think that's what we'll have to also discuss, what could be those challenges.
So the question is about the readiness of our economy with LTC graduation, if I'm correct. Moving on, I think, like it or not, I mean, there's always benchmarks that our economic, social, or health parameters are compared to. We had the MDGs, we had now the SDGs. The World Bank has its own thresholds around income, and there is with LDCs and others. And Nepal almost feels every country, not just Nepal, is responding to this with formulations around goals, right? Where do we want to reach it? There's always some vision or goal outline. Well, I don't think our policy papers talk about necessarily now Nepal being like Singapore or Switzerland, but the reference being Nepal's 15th plan, the current plan, has set out another vision, right? It's like a long-term vision for where we want to be. And that says, I'm sure that you guys are aware of this, it says that by 2043, that we want to be a developed country that's at par at an income threshold of $12,000 per capita. We could be debating whether this is realistic or not, right? Moving from 1,200 to 12,000, that is essentially requiring tenfold increment in our size of the economy. That's probably a discussion for some other day. But even for us to reach to 6,000 or move to the direction towards 12,000, what do you guys think are some of the major binding constraints for our economy?
No, interestingly, this LDC graduation is a talk because normally the social indexes move along with the economic index. And in fact, income becomes one of the major driver that helps you to achieve the social goals as well. In our case, it has been the opposite. One of the reasons is like we have not invested much, probably for like hundreds of years. We call it a laure culture, where during the old days, probably they used to go as an armyman, bringing the remittance home, today as a migrant labor. So relatively for the politicians or the policymakers, the life has been way easier because some amount of foreign currency or the income comes home without much doing on the home ground. So what we have failed is like we have failed as the necessary investments that we need to do. Our portion of the capex that we budget for.
Capex being capital expenditures.
Capital expenditures. The budget with the recurring expenditures that we have the regular expenditures that we do. On the budget side, even though we allocate something, but if you really see the expenditure part for last 20 years, this has been very poor. And again, the sectors that we have targeted and the growth that we should have achieved through the capex investment has been really poor. So because of that, there has been a significant shortfall in this investment side. Because of that, our income level has been poor. So going forward, now let us forget like what has already happened. We laid out 15th plan. So we're already 2023 now. We have a 2030 dream. So the 15th plan clearly lays out that we plan to have a 10% plus of growth. We call it a CAGR or cumulative average growth rate. Even for a 5% annual growth, our annual mobilization in terms of capital like the government expenditure and from the financial institutions like banks, mostly the banks here. So roughly it's around 700 to 800 billion Nepali rupees. That is equivalent to roughly $6 billion worth of dollars. That is the maximum that we have that we can mobilize. So with that, we normally achieve around 5% worth of a growth. So there's a street shortfall of almost like $5 to $6 billion of annual investment deficits if we really want to achieve the 10% growth and 2030 dream.
Well, that's a pretty big number. So clearly, we've discussed that our economy, especially with regards to investments, we're trailing behind, right? So while other sectors are moving quite well, social health, etc., our economy is not doing as it was supposed to do or as expected. And there is a big financing deficit. Anup, where is this financing supposed to go?
I think, like Shreejesh also kind of raised that particular issue. It has to go in infrastructure. It should be generating income for us. It should be generating results for us. So I think, again, to add with this is we have this constraint about where the money is coming from, where the finance should go. But I think equally important is how we implementing it. I think that's where the real challenge also we see. I just want to give an example of what I see every day. So I stay in Sitapaila. When I drive to office, I have to go past this bridge in Kalimati done by Papu Construction, right? This bridge has been done. I don't know if the fund has been dispersed or not, but that is there. The bridge is there. I think it's used as a parking. I see that. And in our context of how we are doing it from an implementation perspective, how we are making policy is a big problem here. When we talk about constraint, it's not only about financing, so we might raise financing, we might have capital, but the issue is how we are making policies and how we are implementing it.
Excellent. So what I'm picking up is that there is a big infrastructure deficit, and we also have a big financing constraint. And the third element being that the broader ecosystem of how this is done with regards to policy or investment climate, that is really like the three major binding constraints for the Nepali economy to at least move towards the direction it has set. This is actually a good segue for us to move into a more elaborate discussion on financing. And Shreejesh, I want to begin with you very broadly. What is the state of development financing in Nepal? We know for a fact, as you've said, that there is a big deficit as of now, but you can also talk about some of the sources of financing in the Nepali market today.
Well, so far, our major financing comes from the domestic capital. Post 1990, primarily, few more sectors were opened up to the private sector. And to list it down, it was transport, telecom, and the banking. So in the last 30 years, if you see the banks, opening the banks to the private sector where some amount of foreign capital have also come, they have also bring the expertise, the financial models. And today the private banks have more or less equal kind of trust like a government banks. So where I'm coming from is today, out of the total domestic capital that is mobilized, almost 70 to 80% is mobilized through the banking sector.
Just before we go there, I'll just stop you for a moment. You mentioned that domestic capital is a big source. So what percent of our current, if there's a number, what percent of our total financing at the moment is comprised of domestic capital?
So minus grants, there are very less of foreign debts, except for the good thing is the government borrows mostly from the multilateral and the bilateral agencies, not the commercial borrowing. The process of commercial borrowing by the banks have just started. We were one of them. As a bank, way back in 2018, we started commercial borrowing. Else, it is, except for the grants, largely the bilateral loans that is raised by the governments is largely the deposits that we raise in the local market. And in fact, those deposits, the major chunks, it is supported by the remittance.
And you've been in the sector too long, and I'm sure you can answer this, is how much of the domestic financing is actually going to big infrastructure or like building hydropower or building roads or other means of infrastructure, if there is a number or a percentage that you can quote?
Well, this is a very tricky question. See, everything we need to align with the dreams that we are planning to have. For say, like 2030, we plan to have almost 6,000 megawatts of power. Today, we have almost 2,400 megawatt of installed capacity. That is in the next 6 years or next 7 years, we need to build another 3,000. Only on the energy. I'm just touching on the energy side. I'm not talking about roads. I'm not talking about any other aspects. Only for energy, we need almost even if we really want to reach around 6,000 megawatts by 2030. In fact, the dream was for 15,000 megawatts if you see the plan laid out by the government. And by 2043, we want to reach around 40,000 megawatts. So even reducing that number to 6,000, based on the calculation, for say, like if every megawatt of power demands around 20 crores of Nepali rupees, then we need, even in today's space, if we see like the banks investing to their potential, we would be needing at least a $5 billion worth of investment in energy sector alone for the next 7 years street. So the first question that we need to answer here is like, one, what are our dreams? Like, where all we want to grow? And what are our priorities? Like Anup rightly said about the bridge. The bridge is already completed by Papu.
Well, it's still not serving interest.
It's not serving the interest. So whatsoever, the capital has already been deployed there and that's stuck up there. So that is not giving you any productive return. So based on our priorities, what kind of the sectors that we want to target to bring the productivity. Then we can decide like what kind of capital that we need. But the question here remains like, do we really have enough capital to invest there or not? One. Number two, even we have, do we want to free our domestic capital for the areas which are our core priorities and bring in foreign capital so that we can grow the way we have set up our dreams? So for now, roughly just one sector like energy demands roughly $5 billion, provided we really want to achieve that dream that we have laid out.
And that's our requirement that you mentioned, that's just going to one sector, right? So that's an interesting point. Anup, I just want to come to you for the same question. I mean, you being in the legal industry, how do you see Nepal's financing sector growing? And the specific point being the liberalization in 1990s, right? Shreejesh mentioned that was really a pivotal point where the banking sector came in, and today this served a big interest towards mobilization of domestic capital. How pivotal was that, and what are your observations on this?
In terms of our foreign investment law, the most famous one is 1992. That's where we'd also open up our market. But what I feel is the amount of investment that should have been here, that's not really coming in. Either we talk about equity or debt. In all of these products, Nepal probably has not been able to attract in the same volume as, let's say, Bangladesh has been able to do it. And I think we need to figure out what the constraints are and why, investors are not really coming in. And we can look at some of the data later on, and then we'll know what are the constraints on equity side, what are the constraints on debt side, what are the policies issue that we'll probably need to look at.
Hi there, this is Kushi from Policy Entrepreneurs Inc. We hope you're enjoying Pods by PEI. As you know, creating this show takes a lot of time and resources, and we rely on the support of our community to keep things going. If you've been enjoying the show and would like to help us out, we'd really appreciate it if you could become a patron on Patreon. Patreon is a platform that allows listeners like you to support creators like us with a small monthly donation. Your support will go a long way in helping us to continue creating high-quality content for you. So if you're interested in supporting our show and becoming a part of our community, head on over to Patreon and become a patron today. You can find us at patreon.com/podsbypei. Every little bit helps, and we can't thank you enough for your support. Now, let's get back to the episode.
So if you were to draw a trend line of how our sources of financing, especially on the infrastructure side, has changed post-liberalization, right? So in our own research, what we kind of pick up is that most of the larger infrastructure are bilaterally financed, or there are multilateral sources of financing, and there is a grant or a concessional arrangement. And now we are talking about, because this is still not going to be sufficient, that we borrow from outside. Is that correct?
Yes.
So there are things like FDI, right? You have commercial foreign borrowing that is on commercial terms. You have concessional loans, right? So these are all forms of financing that is available. What is the broadest range of what these things are and how they differ from one another?
These days, capital brings the instruments. It might sound... rather than just saying like equity, debt, or like, concessional loans and all that. Concessional loans are primarily provided by the multilateral, bilateral agencies, primarily, again, looking into the social factors, more of social factors along with the commercial factors. But if we are targeting commercial kind of borrowings, it can change into any form. Today, most of the funds are not raised only through debt or pure equities. We call it a private equity, venture capital, alternative investment funds. A hedge fund could be still a bit far-fetched dream. For infrastructure projects, there are real estate investment in a model of trust, in a model of funds. Infra fund. So you pull the assets and you can list, you can raise the capital, and it works like a fund. So there are different kind of products that are available based on your need. It's like, you customize based on a broader product category, like there could be equity debt hybrids. There could be profit partnership even on a debt side, like coupon rate or interest rate of debt could be relatively smaller, but you participate in the success side of the project as well, where there's a profit setting. So based on the need and the viability of the project, along with the risk taking by the investors. So today, most of the capital that are raised through on an instrument mode, on a broader product category. So equity these days are relatively, it has been kind of old dated. Yes, equities are raised, but the sponsors starts up with the idea, he sets up the infrastructure, and the funds come in investing as a growth capital. So we cannot limit, post 1990s, even though we are a liberalized economy, we are yet to explore ourselves to the outer world, like, what forms of capital that we can bring and how can we be more flexible towards bringing this kind of capital.
So I just want to step back. I mean, we've been talking about complex financial instruments, models, and I myself am not aware of some of these things. But still, the reason why I want to step back is, as a lay Nepali, we talked about the larger development narrative, and the context has been that on the infrastructure side, especially large infrastructure, is that, there's going to be a country that is going to give us some grants, give us some money, and then we're going to build projects, right? And what I'm kind of making out from this conversation is that approach of how we finance our infrastructure is not desirable, neither is really sustainable, and we really need to think beyond.
I think, see, what is happening here is, I don't think so there's any good example of any critical infrastructure which has been developed by private sector. Let's exclude energy for a bit.
Well, in the Nepali context.
In the Nepalese context. So roads, everything that has been developed so far has been all publicly financed through taxpayers' money, through government taking concessional loans. In this context, I think what is really interesting to see as to, there's an episode of, what happened with Tarai Fast Track project, which government bid, and that was going to be one private sector finance project, right? So, but what happened? Ultimately, at the final stage, government cancelled the thing. They were ready to award the concession, but they did not sign it. And what happened was we ended up using public finance, taxpayers' money to really do that construction. And I think we know the results. I think 3 times more the cost has been, and time has been.
The opportunity cost is pretty big. We can come to fast track later.
Yes. So, but the example is we don't have any infrastructure projects which have been financed from private sector, I think, till now, and that's not really a good state to be in.
So we discussed that we will need foreign capital. I'm assuming that foreign capital is not going to come by itself, right? And that it needs to be attracted. So have we done enough to actually attract foreign capital in Nepal? Is Nepal an attractive market for investment? What do you guys think?
Well, the first thing is, I think it's more of a mindset and how do you market yourself. See, at one point in time, probably 10 years back, it was always the returns first when it comes to the investment for any commercial capital. Like, if the returns are good, there is a risk taker. But today, if you really see, safety is the most important component. And the liquidity of your investment is the priority. Your
Safe
capital
in what regards?
Suppose like somebody invests in Nepal and they want to, for any reason, if they want to exit, if they want to shut down the business and go, how easy is the process? How fast they can liquidate and take back money home? And then it follows the returns. The returns is like kind of a negotiation. There is no hard and fast rule that I need a return here. We've seen projects in Nepal by the foreign lender community, whether DFI or commercial, probably an IRR of 8% to probably 16 or 24%. IRR is internal rate of return. So somebody is ready to invest even at 9%, and somebody is also looking for 24%. So it is so debatable. But the first question here we need to answer is like, will there be an easy entry and exit route or not? If I want to liquidate, and can I go back? So as a country, the first thing that almost all those countries who have been able to raise a handsome amount of capital is relatively the easy flow inlay and outlay of capital. India, for example, or China. So these are one of the biggest countries who attract the biggest amount of FDIs. We talk a lot about Chinese political regime, but still the investment easily flows to China. and it comes out.
So it's not just about profits, but investors are essentially looking for profits, but equally important is the business enabling environment and the level of transaction cost that is required to come in, go out of the business, right?
In terms of infrastructure financing, on your question on have we done enough? So two things I want to share is first, in most of the discussions we've had with clients, they ask, is there a track record of exits that foreign investors have made in Nepal? And yes, we can show some track records, but we don't have enough data to actually demonstrate to the real commercial private sector investors to really, for them to be convinced, yes, there's a solid track record, money can be taken out of country. So I don't think a lot of foreign investors are convinced. And broadly, when we say about have we done enough, is also, is our policies, structures, regulations a bankable document? See, any investors, of course, they're going to put equity, but ultimately they will also have to raise debt to finance that particular project. And the really question comes to, is there a bankable regime in Nepal so that both equity and lenders can really invest in infrastructure?
Anup, I want to continue the discussion with you and drawing from something that Shreejesh had mentioned around mindset. And this is something that is not very clear, but something that you kind of sense when you're engaging in the Nepali policy space, that there is some hesitancy or reluctance when it comes to conversing on bringing in money from outside. Do you sense that there is that hesitancy on the Nepali policy space? And why is that the case, if so?
Why? I don't know. I'm still trying to figure out, but definitely there is. I think there are two big issues that we face or we feel when we're interacting with policymakers. First is, I think there is generally distrust on private sector. And second is, in terms of foreign investors, foreign lenders, there's also this feeling that they are just out here to make money. They're going to take money out from Nepal. They're going to earn from our resources. I feel that is the case, and it's kind of reflected in some of the policy that comes out, this mistrust or lack of confidence. I don't know why it is there, and I also don't know how to resolve that as well, but it's definitely there.
Shreejesh, your thought on the same. Clearly, the numbers that we discussed and the context that we discussed really pointing to the fact that our economy is not going to grow without debt, right? And that debt has to be financed from somewhere because there is going to be a limitation on the side of the Nepali capital mobilization, right? So what are your thoughts on this whole mindset of Nepali policy space, because you're interacting on a day-to-day basis?
So, well, let me just give one example. 2018, we just did one deal of $15 million. We ourselves were hesitant. We didn't know whether we can do that or not. How do we hedge this portfolio? But realizing this, unless we have a foreign capital, even for a local banks to grow their balance sheet, we need a debt. So for any investor, the debt is the first proposition, because somewhere or other there is the risk is relatively limited. There is a counterparty who is going to pay. You assess and you just take a small amount of risk. Equity relatively is, for the country like ours, it's relatively not, it's kind of inflexible at times. So that you repay. 2018, we just started the $15 million. And we set a precedent. 2022 or 2023, we're doing a single ticket of $100 million deal. This year itself, I have a pipeline of almost $140 million, which is equivalent.
That is money coming from outside.
Money coming from outside. So yes, we have a horizon of based on our need, probably we can we can take a drawdown in the next 2 years in the biggest deal of $100 million. But if you just look into, for the country's perspective, the total FDI figure itself is near about the same amount of money. So a bank, with its own efforts, of course, with the help of central bank and all, with making the policies, and there are some inflexibilities where we have a difference of opinions. But again, why I talked about mindset is had we just rejected the first transaction, there would have not been any precedent. And every transaction that we have done since 2018, somewhere or other, in terms of interest rate that we pay for debt, except for the reference rate, the premium or the risk, the cost of risk has relatively reduced. So the lenders are more flexible. So in terms of you're giving more money at a cheaper rate. And today, the Nepalese banking diaspora, a lot of banks are now going outside and borrowing into the capital. So why I just wanted to give this example as a bank. Primarily, it falls under my portfolio. I know the story, and some deals like Anup is also there. He knows the story as well. So what I'm trying to say here is, we need a foreign capital, and we need to set the precedent first that the transaction happen, there will be a repayment, and we'll be flexible enough to help you out as well. So the government needs to trust the private sector. Post 1990, had the banking not or the transportation industry not been open to the private sector, where would I have been today? So in terms of the road transportation, in terms of air transportation, who leads the show today? The private sector. Banking, private sector, and relatively more efficient. So fast track or any examples that we take. So the money flows where there is efficiency. And government needs to facilitate on this. And some way they have a kind of, I don't know, we call it a mistrust. But there is a kind of strong hesitation, the narrative is they make profits. All investments looks for profits. And that's where the efficiency lies. So the fast track, had it been made in I think it was 110 billion Nepali rupees equivalent, or probably 115 billion. Today, we're not even sure whether it will get completed in 300 billion Nepali rupees equivalent, and the given timeline. So some way we have to come out of this. We can see Bangladesh has come out of this. India has come out of this, and they're doing fairly good.
One of the strong narratives that exists in the Nepali finance space is this question around debt versus equity, right? I mean, part of our conversation today has been we need both, but you almost feel there's a tension around debt versus equity. And Shreejesh, you mentioned FDI being a form of equity coming in, and you take global examples in the region itself, countries talking about we need more investments. What is the FDI scene in Nepal?
So Bangladesh attracted $2.9 billion US in 2021, and we did $0.2 billion US. I think from that perspective, it's very clear that we've not been able to really attract foreign investment. And whatever foreign investment they're coming in, it's mostly in energy sector. So there's no diversification as such.
So if you were to really, sticking to FDI, if you diversify and aim for bringing in investments from more advanced and developed countries like US or UK or from Europe, why aren't they coming in? Aren't the returns or other business enabling environments really constraining that investments?
Okay, so we had one situation where our client had started the hydro project same time in Vietnam and in Nepal. So Vietnam in energy sector, they'd already completed, COD was done, completion was done. And in Nepal, they've not even reached the financial close in 5 years, right? So imagine that kind of investor, if they had a choice, they'll probably not even look at Nepal next time. Second is, I think from other sectors where investor may have a lot of options. So what is the advantage? What is the benefit we're providing to foreign investors? So for any project, they're looking at, let's say, Nepal, Vietnam, or other jurisdiction to see which country should we establish this particular project, right? They had option to go to India or Bangladesh or Nepal or Vietnam. As a multinational, you have a lot of choices, right? So there's not a single parameters that Nepal can produce and give it to the head office to say, come to Nepal because this is what we have advantage as compared to, India or, Vietnam. So that's where our limitation is as well. And when you look at the, cost of labor and so forth, and then add Nepal generally being very time consuming country, that does not really make Nepal as a good, attractive destination as well.
Just to broaden this conversation to a relevant point, and that being that we talked about Bangladesh, Sri Lanka, India, and how successful they've been in some regards than others to mobilize financing, right, for the infrastructure development work. But the contexts are, well, in some sense, similar in the sense that our society, the way we do business, all of that is same. And then there are other elements that we are different on, right? And that is what has probably taken them a step forward to draw in more investment. But even for these countries, I'm assuming there were some barriers in the initial days of when their growth story began or when their financing interest to bring in finances from outside began. Can you share to our listeners some examples or your own observations of why these countries, what barriers these countries really cross to mobilize finances for infrastructure development?
Let me just put up a couple of points here. One, as a flow of capital, the first debt flows in. So whether we like it or not, equity is relatively a longer term, whereas a debt is time bound. So debt has a repayment timeline, whereas equity does not. So because of that, to start with, debt becomes relatively easier for any of the investors. Second, on a policy level, before I go into a deep down into the examples, on a policy level, we see most of the policies, when they come, they are very half-hearted. So for the investor, the first thing is the commitment. And second, based on that commitment, the investor builds their own confidence to invest. So when a policy becomes half-hearted, your energy primarily goes to, like Anup said, like, whether to invest in Nepal or India or Vietnam. Investor is looking, Nepal may be a very attractive destination, but there could be another destination where it's relatively more attractive. So investor primarily flows there. So this is what's happening. So even we claim that we have hydropower, we have this, like we are one of the best countries in the world when it comes to tourism. Say Lonely Planet said this and that, but people are not coming here. So
other countries are doing the same probably, right? They are also marketing themselves.
Exactly. So our policymakers, to set the precedent, like these are 10 best projects that we want to showcase to the international community, the investor community, and come and invest. And these are really good, profitable projects. So once these projects are through and it establishes a precedent, then the other investors automatically follow. The way I put up the example that we just started with a $15 million small fund 2018. Today, one deal in 5 years is $100 million. So it applies to the government as well. How will they showcase themselves to international community that Nepal is a bankable and a very investor-friendly country?
I think there's a really good example in how India did. I mean, we've heard that their chief ministers visiting big companies outside and how they were creating ITC sector there. Very recently, Radhesh Panda said in an interview that investment in Nepal will not come just by publishing ad in Gorkhapatra. Our Prime Minister has to write to the CEOs. And I think that's the difference between what other countries, neighboring countries have done and what we are not doing, I think.
What is the reluctance on Nepal or Nepali policymakers' side not to do that?
Well, let me just add. See, like whenever we talk about investment and risks, the bureaucracy or the bankers primarily look from not the opportunity side, you look from the risk side. So we have a very bad precedent. Small countries like ours, 1990, we call it the Asian crisis. Thailand, Malaysia and Indonesia, like serious foreign debt, foreign capital outlay. And because of that, like it was a serious mess. So Nepal is a small country. Yes, we have a lot of foreign capital and one fine day if a bigger chunk of exits are there, it will be very difficult. So you need a balance. Well, Bangladesh, the good example of Bangladesh is their policy consistency, primarily on economic issues, likely the governments. All the political parties are aligned in a common kind of economic policy. They will not hamper the export of governments. The narrative has built so strong that even a Labour understands that without these, we should not stop. Even there is there are difference of opinion with the pay rise whatsoever. We will solve it, but will not stop the production. Will not let cheese the investors so that they just don't want to do business in this country. But our case is like whenever it comes to foreign investments, we see based on the news and all, like some way we think about monetizing before they make the money itself. So
well, that's a good way of saying that.
So
our way of doing business is very extractive.
So again, commitments are very important. This year, India in last
we've made several commitments, right? I mean, we're not short of commitments.
So, but like a consistent commitment. India, I would say, way back when Raghuram Rajan was a RBI governor then, the first thing to attract the foreign capital that he did was he bought an inflation-linked bond. So for the foreign investors, the risk of currency depreciation, somewhere or other, RBI committed that we will commit ourselves to maintain the inflation. See, the corpus that was raised was not very big. But the message delivery that went throughout was really big, that as a country, we are committed to attract foreign capital and we'll help you to grow here. And since then, whoever is the government, like whether it's BJP or any political party, they have a clear agenda of growth. Even this year, a significant chunk of India's budget has been committed for infrastructure development. Last year, to my surprise, we talk about green bonds like the big noise. The Indian government raised a green bond worth 16,000 crores as a sovereign bond. 16,000 crores, India, the size of the GDP, the size of the nation, the size of the capital that's flowing in may not be a big amount. But the kind of message, the kind of mindset, the kind of commitments that you have delivered to the investment world or the investors world outside is really big. That clearly sets a precedent and a commitment together that this country is bankable, and as a government, like we are also somewhere or other working with the private sector to bring this capital in. So we have somewhere or other field on that component. We have a serious policy in consciousness. One example just I just want to add here is like we bought a simple, with much of talks we bought, we called it specialized investment funds. Globally, it's largely the alternative investment funds, the private equity, venture capital, and hedge fund guideline. The final regulation, put a line that if you are bringing an FDI, you need to go through all the FDI processes. So the alternative investment funds globally are raised to attract the foreign capital because your domestic capital itself is not enough to take those kind of risks that it intends to invest. So the investment community, once they read the draft, their biggest question is, are you really committed to bring the foreign capital? Because they were hoping that through this regulation that was brought in, they were expecting, at least for smaller capitals, it will be an easy way to enter the Nepalese market. But that didn't happen.
What is the perception on side of the foreign investor? You deal with several of them. We talked about messaging. What is the currently understood message on what is it like to invest in Nepal, especially with foreign investors?
Right from day one, when you speak to them, they already know Nepal is a difficult country to come in from an entry perspective. They also know Nepal is a difficult country to operate. But then most of the investors I have interacted with, totally commercial reasons are only for the energy sector. Other sectors, they are in Nepal just because their CEO loves Nepal. Their CFO has traveled to Nepal. Even IT sector. We talk about Nepal.
But there is a goodwill factor.
There is a goodwill factor. Definitely we have that goodwill factor. But then we've not been able to really add other business-friendly factors, really complementing it. And I think that's really unfortunate. We've not been able to really take a good mileage on our goodwill factor.
Just before we end this section, I wanted to touch on this case of Sri Lanka, right? We talked about how countries in the region were raising funds for the infrastructure. And then bang, you had the Sri Lankan story. And then it had repercussions even up to Nepal, where there was alarms set off around borrowing.
We had not talked about Sri Lanka so much before this.
Well, the fact that there is when we are discussing foreign financing, there are things happening in the neighborhood, and that is signaling policymakers that, hey, maybe that's a danger that we should not tread, right? So how do you interpret the Sri Lankan story, what has happened in the Sri Lankan economic crisis? Because a lot of their funds were sourced by the government sovereign bonds that were floated in the international market. And then that has its own risks, right? So are we in a position as a Nepali economy today to observe these risks if anything happens?
Sri Lankan story or the Bangladesh story, it's a very good story for us to understand. It gives a very clear case study kind of narrative. So my reading is Sri Lanka raised most of the capital or bonds or whatever you name it. They brought money home and they did the projects with aspiration. They just wanted to build the projects, big projects. Bangladesh built most of the projects that were in demand. Basically, all these investments that are there are promoting the exports. Whereas Sri Lanka with the port or airports, yes, the airports are met. But there is no surety whether there will be a flight or not. So what Bangladesh did was maybe it will take some time to build a good amount of revenue, but it supported the existing infrastructure that they upgraded the existing infrastructure to support the export industry, which helped them to get more of the competencies in the international market. They knew they will be migrating soon to the middle income group. They will lose the preferential treatment. So just to as a compensation, to be more competitive in that front, they invest in those areas. Whereas if you see the Sri Lankan story, those is largely based on aspiration that the business will happen. So these two case studies are very important. As a nation, if we set our priorities right and we know what all we want to build, what kind of projects are in demand, see, that is never occurs. Because if you use that in a holistic way, it gives a very good return. If you have a source of revenues coming, the debt is friendly.
So it depends on what mechanisms you have to service that debt, right?
Yes, you need to have projects, like the projects that brings you revenue. Like you need to be sure about these projects will click. The debts will get served.
This is a good thought, and probably we can take this up in the next episode. I mean, financing needs versus financing aspirations, right? Before we close this episode out, there's this one last point. I mean, we've been discussing financing in infrastructure, and then the white elephant that we've not addressed in this conversation is climate change, right? Because our infrastructure is going to be really vulnerable to climate change. We've already started noticing this across infrastructure projects, including hydropower. And then in the global marketplace, there seems to be capital accumulation happening to be a source around climate financing. Just so that our listeners understand what this is, can you guys talk about climate financing, what that is and what that would look like?
Well, climate financing seems like it's much talked about, but it's not that difficult. But again, it needs a hell of a commitments. So for the project to qualify as green, and you need a firm commitments from the government. Today, as Nepal government, if they can really talk about the impact story that it creates, it could be one of the best ways to raise the funds. Even you get a concessional debt, or you can raise a sovereign bond as a relatively cheaper price, provided you have a good project. So the project could be, instead of buying buses, if the Nepal government showcases that will build the infrastructure like the charging stations throughout the country, it could be, the buses are operated by the private sector if it's profitable. One of the major constraints would be the charging stations and the workshops and all. A good example, Lumbini. So I don't want to go into the airport side, but at least we brought a couple of buses and electric vehicles. They're yet to operate. Why? There is no enough infrastructure on the charging station side. On a clean story as well, you need a firm commitment like what clean infrastructure that you're going to build. So Nepal government has probably this is a good space, a very small country. We don't need a very big amount of funds to do the projects because the size or scalability of this country is relatively small. Now you start analyzing what kind of assets that qualify for green and what kind of infrastructure that we plan to probably bring by 2030 or 2035. This could be an easy way to raise finance.
I just want to get your response on this. So moving beyond financing on the climate front, is this really a point of departure for Nepal to rethink its financial paradigm and its developmental paradigm, right? So you, in the initial part of the conversation, mentioned about what our development trajectory is going to look like, what our prosperity is going to look like. So do you think climate change is that window that we kind of try to draw together these parallel streams around financing infrastructure and looking at what our development pathway is going to be?
Yes, I think, in the beginning we talked about where is the prosperity coming from. We talked about policies needed, money needed. And we also talked about convincing people who have money to invest. And I think climate finance is that part that it will help us convince people who have money to invest, because what we've seen internationally is there are a lot of investors who are willing to invest in clean projects. So this is the new area where we can really tap into. And I think in terms of really development goals also, then is if we can raise funds from that perspective, and we are growing in the path of doing, green projects. Our development would be, let's say, very aligned with the prosperity dream that country has seen.
And on that note, we are at the end of the first part of my conversation with Anup and Shreejesh. Please tune in to listen to the second part of my conversation, available on all platforms for Pods by PEI. Thank you.
Thanks for listening to Pods by PEI. I hope you enjoyed Saumitra's conversation with Anup and Shreejesh, where they discussed the current and the future of development financing in Nepal. Today's episode was produced by Nirjan Rai with support from Saurabh Lama, Chiran Kansakar, and me, Khushi Hang. The episode was sponsored by the generous contribution of V-Rock and Company. The episode was recorded at PEI Studio and edited by Hridesh Sapkota and Nirjan Rai. Our theme music is a courtesy of Rohit Shakya from Zindabad. If you liked today's episode, please subscribe to our podcast. Also, please do us a favor by sharing us on social media and leaving a review on Spotify, Apple Podcasts, Google Podcasts, or wherever you listen to the show. For PEI's video-related content, please search for Policy Entrepreneurs on YouTube. To catch the latest from us on Nepal's policy and politics, please follow us on Twitter at tweet2PEI. That's TWEET followed by the number 2 and PEI. And on Facebook at Policy Entrepreneurs Inc. You can also visit pei.center to learn more about us. Thanks once again from me, Khushi. We will see you soon in our next episode.